The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. Welcome again to another one of CW Research's webinars. Today, we will be talking on the granulated blast furnace slag market and its outlook over the next 5 years. Next slide, please. So, to just set the agenda, I would like to introduce, there'll be a brief introduction to the CW group. Then we will delve into sort of the highlights on the market and to give you insights from what we have gathered through our research on this topic. And of course, the outlook over the next 5 years, which is done both on a global as well as regional basis. Next slide, please. So today's presenters include myself, Prashant Singh. I'm an associate director with CW Group, and I'm based out of their Mumbai office. And my colleague, Vanderson Teixeira, who is based out of our Porto office and who will actually be going through the highlights of the report. I would like for those who have heard our webinars before to just bear with us for a few seconds, where we give a brief introduction to what we do to those listeners who have not had listened to us before. So within CW has 3 distinct verticals. One is the advisory vertical, the research vertical, and the media vertical. Within the advisory vertical, we work with major global consultancies and leading institutions such as the World Bank and other private equity firms on a variety of projects. We have consulting and advisory expertise on a diverse product portfolio. We work with organizations and companies for feasibility studies from anything from powder milk to something as diverse as setting up a petrochemical plant. Under research, we focus on cement demand globally, as well as provide detailed industry and country reports on the topic. We, in each of our products, we provide the historical as well as outlook for the last 5 years and a forecast for the next 5 years. For all our major products, including the VFR, which is the volume forecast report, and the TPR, which is the trade prices report, which are the 2 benchmark reports that CW Research provides the industry. We also provide commodity price assessments for cement, clinker, as well as petcoke and coal for specific users. Under the media umbrella, we have an vast online database. You can subscribe to various newsletters of interest. And also under the media umbrella, there are some industry-specific meetings, which, of course, given COVID, have been relegated to being online institutions for now, but we are looking forward to getting back into in-person meetings as soon as possible. Next slide, please. So to begin with, when you look at the global economic overview, in this report, what do we include? We are talking about the methodology of how we came about this report, how we constructed all of the data points. We provide an in-depth understanding of the global granulated blast furnace market, both on a global and regional basis, wherein we describe in detail the volumes and the production of the types of slag, consumption patterns by region, and of course the market size in US dollar terms, as well as the prospects for GGBFS consumption going forward. The regional view, of course, is dominated by China, which accounts for almost, more than 60% of global market size as of now. And of course, all the other regions that you see on the board. The company profiles that are provided in this report are some of the major producers of GGBFS, and our endeavor is not to give a comprehensive list, but our endeavor is to give you a representative sample of major producers in this market. If you would like more detailed information, please do click on the link below when you receive a PDF version of this webinar in your emails. Next slide, please. So to start off, I would like to give a short review of the macroeconomic environment before we delve into the report itself. So as you can see, 2021 really appears to be filled with a lot more optimism, which is primarily being fueled by a combination of the promise of mass vaccinations and also the continued fiscal and monetary support by leading financial institutions and governments. Case in point, the recent election in the United States, which saw President Joe Biden assume office. He's already come up with a plan of a fiscal stimulus to the tune of $1.9 trillion. Of course, it remains to be seen if that will be passing Congress in its entirety, because in a process known as reconciliation, it's quite possible that it'll be pared down. But I think that there's already a talk of a second fiscal stimulus in terms of an infrastructure bill. So I think it's quite conceivable that whether 1.9 trillion is done in one shot or in two shots, the combined effect will be close to this total value. China is all set to be, again, one of the fastest growing economies in 2021, but it will actually is expected to be overtaken by India, growing at a GDP of 11.5%. And this is according to IMF's most recent statistics, which came out on January 20th, which is a remarkable change in events, given that just a couple of quarters ago, everybody was talking about the 23.9% decline in GDP in the second quarter and how that was catastrophic. So, change happens very quickly, sentiments change extremely fast, and now India is supposed to grow to be the fastest growing economy in 2021. So there is a lot of hope that change is coming, but of course, all of this is being underpinned based on vaccinations. All of this talk about a second infrastructure stimulus in the US, and of course, that provides a model for other advanced economies as well as emerging economies to copy. And this bodes well for global construction demand, which is expected to grow at a CAGR of around 3% to an estimated $15 trillion by 2025. Of course, should there be other infrastructure stimuli packages by major governments, this number is sure to go up. So the future sort of for construction, at least at this moment, seems theoretically strong and robust. And of course, by that proxy, means that steel production will be required, and also that means that the outlook for the steel industry as a default is also positive. However, it is very important to understand that these growth expectations remain pinned on the wide use and availability of corona vaccines globally, not just in select countries, not just in advanced economies, but globally, and their ability to handle potential mutations, which is a leading cause of concern right now. Should, as now, a theoretical third dose of a vaccine be necessary to mitigate the effects of these new mutations, this could potentially impact growth prospects, given that an additional 7 to 8 billion doses would need to be produced, distributed, and put into the arms of people around the world. In other words, uncertainty still remains the king, and it's expected that conditions will achieve some sort of normality, as promised just recently by President Biden, by late summer or early fall. We should hope to see some amount of normalcy across the globe as larger and larger numbers of people are vaccinated in the following weeks and months ahead. And with that, I will now like to pass this presentation on to my colleague Vanderson, who will take you through the main highlights of our report. And please feel free to connect with either Vanderson or myself at the end of this webinar through our email details, and we would be glad to share and help you out. Thank you.
Thank you, Prashant. Hello, everybody. I'm Anderson. We will be providing some insights on the current market situation, but of course, the report includes a much more detailed analysis on what's happening and what is to be expected in the next 5 years. In 2020, the global crude steel production is expected to have a decline of 2.3% year-on-year as a consequence of the pandemic, after having a growth of 2.7% from 2018 to 2019. The pandemic heavily affected demand from major industries like automobiles, construction, which led steelmakers to reduce production as demand collapsed in the first half of the year. Since then, a recovery has occurred in nearly all markets. China, after a lockdown in the first quarter of the year, has emerged as an even stronger driver of global growth in 2020, given that it was the only major economy that was growing and had a voracious appetite for steel to carry the massive infrastructure projects that has been announced to offset the negative economic impact of the pandemic. In terms of global slag production, globally, there is no new BF capacities being announced, while most new capacities additions there are for EAF facilities followed by BOF. EAFs, they are preferably as they are more energy efficient and they allow the use of steel scrap to produce new crude steel output. While in China, we see the vast majority of global BF capacities residing, is still slow but surely moving away from BF and migrating to energy-friendly EAFs, which will allow companies to take advantage of hundreds of million tons of steel scrap available in the country. However, demand for GGBFS, which is produced as a result of iron ore melting to form pig iron in blast furnace, is expected to remain strong and possibly growth as there comes a renewed focus on climate change. While production of GBFS, which is grounded blast furnace slag, is ground to form GGBFS, is an intensive process. The use of GGBFS as a replacement for Portland clinker will serve as an important role in reducing emissions in the cement production process. Despite the repetitive nature of the discussion that we have on China, it's impossible to overstate its impact on the global steel landscape. With Asia, pig iron production is likely to be dominated by India, with an estimated around 9 million tons and growing at a CAGR exceeding 6%, followed by Japan with more than 80 million tons at a CAGR exceeding 5%, and Vietnam with 20 million tons at a CAGR exceeding 4%. Out of those markets, Vietnam has been seeing explosive growth over the past few years, emerging from virtually having no pig iron capacity to almost 20 million tons in the period of 5 years. Turkey in Europe has been driving Europe's pig iron production and therefore GGBFS production. In the case of Europe is defined, in this case, Europe is clearly defined as EU 27 plus UK plus Turkey and other small countries. In terms of GGBFS consumption by region, although we have an estimated decline of 1.3% in 2020 on a yearly basis, the drop is decidedly much less severe than was expected at the beginning of the year. China alone accounted for close to 2/3 of this global consumption in 2020, with Asia accounting for a further 17% of the global GGBFS consumption, which is more than twice of the demand from Europe. With crude steel production being the major driver of GGBFS volumes, global economic recovery is paramount to ensure sustained demand. And this growth expectation does not account how demand of GGBFS could be materially affected by legislation. For example, we have a prospective US infrastructure spending bill of more than $1 trillion, which could change the scenario. Well, in this slide, we have that China is the world's largest GGBFS consumer in 2020, and it's likely to remain the largest consumer in the next 5 years, in spite of having a small decline. In terms of market size, China will have the largest share in 2020, with an estimated 63% of global market size. And by 2025, we expected this to account to approximately half of the global market size. After China, of course, comes Asia ex-China, which will be the second largest region, with a market size estimated to be close to $1 billion in 2025. Despite the consumption levels more than twice of Europe, prices are much lower in the region, which results in a smaller market size. This region is also expected to be a major regional driver for GGBFS consumption in the next 5 years, with major contributions from both Japan and India. While Europe is expected to account for an estimated 9% of the global GGBFS consumption in 2025, with a divergence in demand trends within the advanced and emerging countries in the regions. Developed economies led by Germany, France, UK, Spain, and Italy are expected to see a demand recovery to previous levels, while Turkey's demand for GGBFS is set to see a robust growth of 10.7% from 2020 to 2025. Now, as a closing remark of our report, we see that Europe market size is expected to be the equivalent or slightly exceed Asia ex-China in the forecast period. We also see that economic growth is expected to return in major markets as a consequence not only of government efforts, but also as the population starts getting vaccine. Almost all markets are expected to see a slight growth in crude steel production over the next 5 years as well. And after a growth of almost 2% from 2015 to 2020, slag production is expected to remain stable until 2025. GGBFS consumption is also set to have a minor increase, while the total market size is expected to see a decline from 2020 to 2025. In this case, I would like to thank you for your time and attention. I'll see you guys on our next webinar. Thank you, everyone.